Well, a new survey from the Bank of Canada says business sentiment in this country is as weak as it has been since the COVID recession back in 2020. The findings released today found that business outlooks from operators across this country were weaker. This has been several quarters in a row. High interest rates weighing on consumer demand. But it is possible, obviously, that interest rates will stay high to fight inflation. Interestingly, the survey found firms are still, in some cases, planning to continue raising prices, adding to some of that inflationary angst. Maria Solovieva is an economist with TD Bank. She joins us here in studio. Thanks for your time today.
Thank you for having me.
So obviously, we're all trying to figure out where the economy goes, and this survey can give you a sense, at least on how businesses might be preparing. What was your takeaway from this Bank of Canada survey?
Well, this is definitely one of the weakest points that we see, probably since outside of the pandemic, since 2014, 2015, when we saw oil prices crash, especially if you look at the investment expectations from businesses. That tells you that the recent interest rate hikes, the last two hikes, are working through as well as the past interest rate increases. So businesses are becoming a little bit more cautious. And there are also comments from the firms suggesting that demand is slowing, and that plays into their outlook as well.
And cooling the economy was always part of the plan, but obviously we've been hoping to see strong progress made on the fight against inflation. And I alluded to the fact that the survey finds there are businesses that are still in price hiking mode. Is that correct?
So there is this measure of expectations for the output prices, and that's what businesses are planning on passing through to the consumer, and that's despite the slowdown in demand. And previous research by the Bank of Canada suggests that these expectations are actually a change from previous to pandemic dynamics, when businesses were a little bit more cautious in passing through the costs, input costs, onto the consumer, and that's changed, partially because of strong demand during the pandemic. So some businesses are still expecting to pass through the previous costs to the consumer, and that means that in the future the price pressures or CPI may maintain on a higher level, and that's a concern for the Bank of Canada and for us as well.
Well, let's talk about that. We are awaiting a key September reading on inflation at the consumer level tomorrow. Everybody's wondering, can we get back to target levels for inflation? What are your own expectations on that front?
Well, even if we look at the business expectations for inflation, which may diverge a little bit from the outlook for passing on the output prices onto output prices, we do see those levels come down. So expectations for inflations are lower now, and that's a good dynamic, and that's what the Bank of Canada is expecting as well and hoping to see. So there is definitely still work that needs to be done, and that's why we think that the Bank of Canada will remain on hold, but keeping the interest rates elevated for a fairly long period of time to allow the economy to feel the impact of interest rate hikes.
So we'll get that next Bank of Canada rate decision in about a week and a half, and sort of in line with what you're suggesting. It seems most economists for now believe that at that meeting that rates will stay on hold. If we have to see higher for longer interest rates, you're sort of alluding to that, what's the determining factor in 2024? I mean, if you do see businesses getting more pessimistic and it actually really does start to show up in the economy overall, does the Bank of Canada have to move away from having those higher interest rates compared to where they had been?
Well, the Bank of Canada is definitely going to look into that as well. This is definitely one of the inputs in their projections. That's one of the reasons they are doing this outlook survey. I think the most important factor would be right now is to see the CPI numbers to cool further, and also see demand to be not necessarily collapsing, but being a little bit weaker. So that's why it's important to also see what the consumers are expecting. And in the the survey that came out today as well, consumers are expecting that the rates will remain, elevated, and that's actually playing into their expectations of spending going forward as well, and that's important. So I think that this balance of having spending continue to grow, but not at the same pace as we saw previously, is important. Bank of Canada will stay attuned to that.
I mean, psychology is a big part of this,
Absolutely.
so that's something to watch. Just very quickly before I let you go, here we are talking about fresh geopolitical uncertainty, which might play into this bigger, longer-term story of, the inflation dynamics and maybe a changed world that, makes it complicated in getting inflation back to levels we saw before the pandemic.
Yeah, obviously the oil prices will play an interesting, anything that would go and impact, so prolonged geopolitical risk will definitely impact commodity prices, and that could potentially play into the expectations, again, for businesses. We actually see businesses usually, build into their input prices into expectations as well, so that potentially could lead to higher price levels in the future. But at this point, it's very early to tell.
Okay, Maria, really appreciate